Hello, fellow traders. 'Tis I, the Rumpled One. November 10th, trading breakouts. Oh, after the election here in the U.S., things have gone, well, I guess around the world, since we're trading Forex, things are making the pairs go a little crazy at times. So some people are stepping aside, standing aside, sitting it out, waiting it out, but I'd rather get in there. It's more fun when we've got the volatility. At least it's more fun for me. So let's just take a look at its simple, trade, which is trading breakouts. So how do we define a breakout? Well, if you put a line above and a line below and prices in between, when price leaves those lines, it's a breakout. So what I've done is, if you've been watching my videos, I've added a feature to the TROHL5 indicator, which is funny because if the 5 was a version number, this would probably be TROHL105. But anyway, what I've done is I've given us the show timelines, and you can give it a start time. So we're going to start right at the beginning of the day, 00 for hour and 0 for minutes, and we're going to do it on the 60 minutes. So we're going to look at the breakout of the opening 1 hour bar. Okay, so if we switch this over to 1 hour, you can see here that's the high and the low for the 1 hour, but I like to look at 15 or 5-minute charts. Either way, we can scrunch it down if we do the 5s. But you can see here, you can take the breakout of the high and the low. So that was good for a few pips. And then this breakout. Now, I've also put the mid in here. Reason being is you can sometimes take that midpoint crossover. So if you look here, we go back to the H1. You can see here it came back through, it broke in as opposed to breaking out into the zone, starts cutting across the mid. You could jump in here even before it hits the low. So that's how you can trade this. And we can just go right down the line. Okay, there, pretty much a no trade. The Australian dollar, there was a nice trade there. Somebody might say, oh, there's a false breakout. Well, then it comes back here. You just take the stop. It wasn't even 10 pips. So, and if you turned around and traded it, you got your money back and then some. The Canadian yen, I never trade that, but you can see here, that was good for a few pips. Right there, once again, what they call the false breakout. One other thing, though, is you might want to only trade in the direction of the first hour, or you might want to trade opposite that direction. You have to decide. You might want to trade the same, only the direction of the previous day. Because usually if you trade the direction of the previous day, it's pretty profitable. See here, once again, you got a little wiggle there. But if you were going short, okay, it opened here. So in other words, this candle opened, probably went up, went down, and closed down. So we had an open. It crossed that line. Maybe you took that trade, only got a pip or two, came back down this way. Now, if you were going to reverse, you should have been short here instead of here. But then, if you're staying on this pair, you made it up on the breakout. So this is very similar to the buy zone. The difference being is this takes the high and the low of the first hour as opposed to looking at the open and plotting the lines 5 or 10 pips or whatever, however many pips you want above the daily open. And we got the euro franc. Let's see, what do we got here? We've got the euro pound. Right there. Euro yen. You probably could take that trade, and then here you've got another one across that midpoint. And I guess maybe you could call that a fake breakout. The euro, New Zealand dollar. So as you can see, there might be some false or fake breakouts, but hey, that's the nature of trading. But you can also see, you find a pair that you know is going to give you some movement, and there's the beast, the pound yen. It broke out, now it's coming back the other way. You can see here we got breakouts. I don't know what's up with the pound today, why the pound did all of this. But I think maybe the market's going to come to its senses, and the pound's coming back down where it belongs. And we've got the New Zealand, Japanese yen. So you notice I'm still in the Australian, actually the Asian market just opened, but see, this is New Zealand, Australia, the first 3 hours. Then the yen starts right here at the 3 o'clock bar. That's the broker time, 3 o'clock. That's the start of the day. And so you've got those 3 hours here for New Zealand, Australia, and then Asia kicks in right here. And sometimes I will also, when this bar closes, instead of using 00, I'll use 3, the 3 o'clock. So whatever the high and low is here, and trade that breakout. You can see here the New Zealand dollar had some action. So when you're doing these trades, especially during this period, you don't really expect too much volatility or too much movement unless there's news. And so you're probably going to want to trade New Zealand pairs, Australian pairs, or yen pairs during these first few hours of the day. Dollar CAD had a nice pop there. Dollar franc hasn't done anything. And finally, dollar yen taking a few to the upside, and hopefully it should come to its senses and come back down in this area. So that's it. Nothing earth-shattering, but just a way to make a simple little trade, simple little breakout. Nothing fancy, just a couple of horizontal lines. No squiggly lines were harmed in the making of this video. So anyway, I hope that gave you something to think about. And, you know, talking about trading psychology, you know, find your method. Don't worry about what other people are doing. And, you know, somebody could come along and post, oh, you know, you're out there playing for a couple of pips, you know, why don't you trade with these squiggly lines, and, you know, you can make hundreds of pips. You know what? I don't care. I know what I do. This is my account, my method. This is what I do. And I'm not concerned about what you do, and what you think of what I do is none of my business. So as a trader, sometimes you need to isolate yourself from what other people think and what other people do, and just focus on what you do. Make sure you're executing according to your plan, and just stay focused on your stuff. Don't worry about the other people's stuff. You know, their opinions are just that, their opinions. And unless they've got some facts and data and evidence to back it up, it's just their opinion. And so if you sit there and you grind out, you know, 2, 3, 5 pip trades, and you're, you know, bringing home 30 to 50 pips every day, don't let somebody try and talk you out of it, or say, oh, well, you're just a this or that. And, you know, if you were a real trader, you could be making hundreds of pips. You know, there are so many, what do you call them, demo millionaires out there. It's just crazy. But really, stay focused on your trade and just execute. Something as simple as this, I mean, you can do this every day. It will produce. It's like a cow. Every day it's going to give you some pips. All you have to do is just go there and trade them and not worry about it. And one of the things is, traders, you can drive yourself crazy. I know I've done it for years, and sometimes I still do it. You see, there's basically 4 things that can happen when you trade. Okay, you're in a trade, and either you exit the trade or you stay in the trade. And so if you stay in the trade and it starts to go against you, you know, you could be upset, but it was your choice. If you stay in the trade and it goes your way, well, now you're all happy. Okay. On the other hand, if you exit a trade and then it goes against the way you were trading, you're happy. Hey, you got out at the right time. Or you could exit and then it keeps going your way, and then you're all sad, you're all mad. It's like, dang it, right? But you see, you'll just drive yourself crazy, because chances are you're going to choose the negative reaction. So it's kind of like you're damned if you do, you're damned if you don't do that to yourselves. Just stop it. So when you exit a trade, be done with it. Exit the trade. I mean, if you have to, get up, leave, shut your computer down. Just look at a different pair. Just let it go. It's over. It's done. But to sit there and beat yourself up for, minutes, hours, days, because you jumped out, you took a little profit, and then it went 50 or 100 pips your way. If you beat yourself up, you'll go crazy. Trust me. I was short the euro at 123 the other day. Or 125. I was up here. No, let's see. 112. Yeah, 112.30 something. I was short here and I got out. Look at that. If I dwell on this, I will go crazy. So I gotta let it go. I took my pips. Trade's over with. But I could just as easily dwell on this and be all mad. The same thing with the New Zealand dollar. I exited somewhere around here today, I think. Somewhere, or maybe a little bit lower, right around here. All I know is there was more pips to be had, but you know what? I gotta let it go. I'm only telling you this just to show you, it happens. It's trading. You don't know. If you knew, you'd own it all. There'd be no market. So, from the psychological standpoint, when you exit the trade, exit the trade. Let it go. It's over. And if you stay in the trade, that was your choice. I mean, think about it. You're in that trade and you're up 5 or 10 pips, and then it comes back. Maybe you moved your break even to break even plus 1, and it takes you out, and then it reverses. Well, that was your choice. And guess what? It happened to me today. I was in the pound dollar. Somewhere right around here, I believe. And I was short. And I was up about 11 pips. So I moved my break even plus, or my stop up to break even plus 1. It came back, took out my little teeny stop, and then did that. Well, that's trading. That's just the way it is. I could have taken the 11 pips that I was up, but I thought maybe I could catch a runner. And it happens. At least I got the one. It wasn't a negative. So that's just the way it goes, fellow traders. So you know what that means. It's not what you trade. It's how you trade it. TheRumpledOne signing off.